Hello and welcome back to Coin Matters channel. Some XRP purchases were deemed non-security offerings by Judge Analisa Torres in the Ripple case. However, the determination was recently challenged in a ruling by a U.S. district judge. In a bizarre memo, Ripple revealed that 400 million XRP had been released from escrow. Will an additional judge rule in favor of Ripple in the end? If you're new here, you can enter the giveaway by subscribing to the channel and activating post alerts by clicking the bell. This is not a video offering financial guidance. Recent developments include a devastating blow to the ruling in the XRP case from SDNY District Judge Jed Rakoff. Due to the judge's ruling, the SEC's case against Terraform Labs and its creator, Du Chuan, can move forward, taking a strong stance against the distinction between retail and institutional sales that was advanced in the Ripple litigation. Twitter user John Reed Stark is responsible for bringing the court's verdict in the Terraform Labs case to the notice of the general public. Former SEC Enforcement Division Attorney Stark disclosed Judge Rakoff's opinion on Terraform Labs' move to dismiss the SEC's action against them. You may recall that attorneys for Terraform and Du Quads urged the judge to toss out the SEC's complaint. The attorney contended that the assets at issue are not securities and used the judgment in the Ripple case to support their position. In response, the SEC argued against the judge's rationale in the Ripple case and stated its intention to appeal the ruling. Judge Rakoff wrote that the SEC has jurisdiction over the case and a reasonable argument that TerraUSD, the anchor protocol, and the one I may have violated securities laws, so he rejected a request from Issue Return Form Labs to have the complaint dismissed. Judge Rakoff strongly disagreed with the method employed in the Ripple case and publicly opposed Judge Torres' ruling. He was critical of how the Ripple instance differentiated between retail and wholesale markets. According to him, the Howey test does not take into account a buyer's expectation of profit when purchasing coins, regardless of where those coins were minted. The significant questions theory, which prevents regulatory agencies from going beyond their scope, was also challenged by the judge's decision. Coinbase is one of several cryptocurrency defendants that has employed this defense against the SEC. Judge Rakoff rejected this argument, saying the Bitcoin industry is not as important economically or politically as other sectors. Judge Jed Rakoff, Stark said, is one of the most respected securities law jurists in the U.S. federal court system, further emphasizing the importance of this ruling. The independent approach that Rakoff has earned a reputation for is something that the former SEC attorney brought up as well. Concerns were voiced by David Schwartz, CTO of Ripple, who noted that the court's decision seemed to rely on the special traits of the Terraform Lab scheme rather than the overarching features of cryptocurrencies. While the court may have had some underlying disagreements with the Ripple case's logic, Schwartz noted that this did not appear to be the case. Instead, it depends on how the two sets of facts differ from one another. Two different readings of the court stance were presented by him. For example, the court may rule that the Ripple decision was incorrect because it relied on criteria that were outside the scope of the Howey test. This suggests the court may not apply or adhere to the Ripple decision. This is the worst possible outcome for Torres's decision supporters, says Schwartz. The alternative explanation is that the court did not agree with the idea that it should follow the Ripple ruling in the Terraform Laboratories case because of the Howey considerations, but rather because of the unique circumstances of the Terraform Labs action. Despite Wright's argument to the contrary, the particulars of the Ripple instance indeed justify drawing a line between retail and wholesale markets. The court seems to think these details don't really apply to the Terraform Labs case. Schwartz remarked that in light of recent events, this is the most favorable scenario for Torres' reigning supporters. As of this writing, XRP is trading at a price lower than 70 cents. Yesterday was the first day since July 13th that XRP ended trading at a price below the psychological 70 cents barrier. Asset prices have dropped 2% to 69 cents per share in the last day and a half. XRP coins held in escrow by Ripple have been released as part of the company's regular monthly escrow execution exercise. A peculiar message was included in one of the escrow execution transactions involving 400 million XRP, and it has piqued the interest of the community. The mysterious document was initially brought to light by Mr. Intuitive, a prominent member of the XRP community, who, in a recent tweet, expressed his shock and disbelief at the contents of the message. At midnight tonight, the memo was included with an escrow execution transaction. Approximately $275 million was exchanged for 400 million XRP. It was a seemingly routine escrow execution, but the accompanying memo, which said "Red said and is now limbo tepid jam is now hot jam," stuck out. A mouse has snared DI's rat. When will Jeremy H.'s hijacked Twitter account and malfunctioning doc be fixed? Will the gathering mature into an actual party? Will there be live coverage of the uprising? Also, whether you want your sauce mild or fiery, David is the key ingredient. The letter can be interpreted in a variety of ways, however it does include some references to events within the XRP community. The hijacked Twitter account of attorney Jeremy Hogan is highlighted in the document. Hogan's Twitter account was hacked on July 24th by fraudsters who used it to advertise a fake XRP giveaway, as was reported last week. In the note, lawyer Jeremy Hogan wonders if there's any chance of getting back into his hijacked Twitter account. Hogan retrieved his account on July 29th, so your inquiry is a little late. The document also asks David Schwartz, Chief Technology Officer at Ripples, if the secret sauce is mild or fiery. Given that the message might have been written by any employee at Ripple, its cryptic character has sparked strong emotions from the community at large. It's worth noting that the tone of the article is very similar to those of articles by self-proclaimed rulers in the XRP community. If you examine the address that started the escrow transaction closely, you will see that the person behind it has been sending and receiving messages like these since 2019. On April 1, 2019, a similar note was discovered in an escrow transaction involving 1 billion XRP. The XRP community is at a loss to determine who is responsible for the messages. However, David Schwartz has been cited by advocates. Schwartz, who is well known for his wit and social skills in the area, now finds himself in the thick of the action. The most likely scenario, however, is that nobody at Ripple wrote the memo. Any user, whether they are an employee of Ripple or not, can request that a transaction be closed or canceled, provided certain criteria are met. Taking this into account, it's not unreasonable to assume that a member of the XRP community wrote the memo in question in an effort to garner some publicity. Without more information, though, this is just conjecture. Okay, that's it for today, gents. How do you feel about XRP? Participate and share your thoughts in the discussion thread. If you enjoyed this video, please show your approval by clicking the like button. Also, if you want to be notified the next time we release a video covering the latest XRP and cryptocurrency news, make sure to hit the subscribe button and enable notifications below the video. See you later, bye.